So we had a member send in some questions, and they were actually really good questions. And so I wanted to record a video response and then provide it for everybody, so everybody got benefit from these. All right, so here is the video. Hey, Craig. Glad you're noticing things that a lot of people don't. Um, but that's here nor there. So I've got it's easier for me to do this in a video um, than type it out. But I've got my edge pulse just to show you. I've got the companion lines off, or I'm going into the OG mode like this. So this is OG, right? And then we have our pro, and then we have our standard, um, which has got it's pretty much OG, but it's just a little different. And then I'm going to show you with this before we get into the other ones with the other lines and the reason for them even being there. So price sitting near the middle line, you're absolutely correct. That is kind of an exhaustion point. That's if you look when price is kind of close to this, you'll see that we have chop, and we're not really getting any type of expansion or any conviction in movement, right? Now, when you see price drop and this line is changing colors as it's falling through the middle line, you'll notice that price is actually falling through, and this is actually signifying the pullback. So we get a drop, come up, pull back, and it doesn't come back up over the zero, and it falls down and turns red again. So we're seeing, a pullback position here. Now the arrows on the OG, and I believe they're still in pro. I just think it's still there, but it's being confluenced by some other things, and there's a diamond there, a little blue diamond. I'll explain that in a moment. But the arrow is kind of like a wave trend type thing, where it's showing an extreme or a confirmed rejection on like on wave theory type stuff. So that's what that's showing. And then we get our break up, and then we're getting green above the zero line, right? So that's kind of a confluence in itself, that price is doing something that it wasn't doing just a moment before. It's rising on this, obviously, and then down over here we're dropping, or we're distributing. So that's kind of how edge pulse works. Now when you add in when you go to pro, right here, it's actually taking multi-asset confluence. So it's reading, if we're on NQ, it's going to be reading ES and RTY, YM, and I believe, yeah, it's just those three. We don't have the VIX in this one. And so it's showing you the conviction, or not conviction, but the point of where that asset is, as far as is it consolidating, is it exhausted, as you mentioned, or is it expanding? And you can see that right here we finally get a breakdown when it's coming down into this end cap. So it's kind of giving you a signal that, hey, this might not be a real drop, right? Because not all three assets are actually, I think VIX is in here. Yeah, it is in here. So but no, that's sugar, honestly. But after 1 o'clock, sugar doesn't have data anymore, so it stops working. It's really good for in the morning though, because sugar is an inversion of NQ a lot of the times. But we do change those assets as we notice things change. We do pay attention, and we'll come in and we'll actually modify them in updates. But anyways, so after 1 o'clock, just reminds you that the gray is no longer there. We might update it so that just removes it. But this silver or grayish one doesn't have any confluence. But look at the purple. It's not coming down with it, right? It finally does at the end cap, but there's a rejection right back up. See that? So it's right back up before before price even really rejects, going back up right in this area here. And if you just follow just a little bit of price structure, we get a low and then we sweep another low, right? So that's grabbing liquidity. And then if you look, there's actually a divergence in the edge pulse, right? So here's your, lower low, and then you look at edge pulse and then there's a higher high, right? So they're showing you the divergence at the end cap. That's a really big sign. Then flipping on trend shifts, I would take this entry, to be honest with you. Just to be 100%, I would throw 0.25% of my risk on this, right? And then as you're breaking up through trend shift, I want to show you the price structure as it goes through trend shift. So let's get rid of this stuff on the chart real quick. Let's turn off this beacon line 2. Yeah. All right, so here's the beginning of the zone, right? In my mind, we've already got a divergence off of the end cap. I'm already convinced we're gonna reject this, right? So I would be in a quarter, maybe even half of my position, okay, and trying to target this up here, right? And then and obviously this is in hindsight, but that's what I would do. Who knows where my entry would actually be? It could be like right here, my reaction, whatever. But once I saw the divergence in this breakup, I would enter somewhere around here. So we'll just put it at the end cap. And then here's the brand new 30-minute, right? So we get a break up over the zone right here. Okay. And then price crashes down. I want you to pay attention to where edge pulse is right now. It comes down, but it doesn't break the 0 line, and it pushes right back up, closes over the dynamic zone. So this is what it looks like in real time on that candle, right? You have to load. No, we're actually in a 30-minute order block, but that's okay, because if we're bullish, that's used as fuel. Okay, that's going to be used as orders, and definitely will enter into this. Now look at this candle here. Now on the next candle, we're not dropping below. That right there is another entry. Okay, so I would go, if I didn't enter here, I would definitely enter here, and then my stop would be under the dynamic zone, and then we're trying to target the next end cap as well, right? And then and that would I don't always enter full position size on all entries. I always look for we got some lag going on here. Get the chart to reload. I don't know, our internet's been crazy. Oh man, so there, okay. And sorry about that, but just to make this a little simpler, the candle that you entered on, that you rejected right here, would be an add-on point for me, right? And but then again, I've been using this a lot longer. It says there's nothing against what you did. There's obviously you saw it and you took the trade, and that's awesome because it was a good trade. Now that we've gone way past that, all over zones and everything are gone, but there you go. So that's a really good way to get into this, staging in your position, and adding in as it's actually confirming in multiple steps all the way up, right? So the way I normally do things is I'm looking at like 25% in, 25%, 50%, whatever it is going to be, who knows, and then running it up. This right here, obviously I go break even. This one runs up, I'm going break even. This one running up, I'm going break even. And if they turn around on me, oh well, it just sucks. But if they don't, it's a really good trade. You're looking at almost a 5, almost a 4, almost a 1.5. Now I want to talk about the vertical line. So the vertical line was created for newer traders. Okay. Basically the logic behind it is, as if the move hasn't happened by that period, it's more than likely not going to happen. Okay. And it just goes back to pulling some statistics that we found that 30% after 30% of that time frame, that interval, if the move didn't happen already, it more than likely wasn't going to. So that's what that was designed for, is for the newer traders to go, oh, well, it hasn't happened yet, so I'm just going to walk away. But this one, what do I keep doing? Oh, I'm deleting the actual indicator. So but if you look at it, the move did happen. This is where I would consider the move actually taking place. The cross through, using any type of candle range theory or anything like that. That's if you look at what the zone is doing, the value of the zone being created on a 30-minute, this crossing like this through is the I don't know what you call the manipulation or whatever is the cause for trigger initially on this 30-minute candle, right? It's showing its hand at that point that yeah, we're probably going up, and that happened before 30%. And then we had and then this rejection candle, yeah, it happened after 30. So nothing is set in stone, but this is just a general idea of for newer traders, just to give them something, a visualization of my chances of success are dropping, right? And that's all it's for. It's not a an indication or a signal that, hey, if price happens, if it happens or whatever after this or anything like that. So that's all it is. And then but I do want to show you something real quick that's going to help you even a lot more. So if we go into our indicators and we go to real flow, it's going to pop up with the midnight line, right? I use the midnight and the daily, honestly. So I would have two of them on my chart on another screen, but we'll put it all on here. And then we're going to set this to and you can use this to scalp too, but I have one set to midnight and then I have one set to 1 day. Now let me get this a little bit bigger and I'll just show you what I'm talking about. So you have a 0 line and you have your zone, right? To be bullish, you want to be price, or not price, but this I can actually set up here to be above and above the 0. You want it lined up the way it is right now. Same with this one down here. You want it above the 0 and above the zone. If they're neither one of these are doing that, you're not in an area of expansion. You're going to be chopped out. Something's wrong. It's not a good setup. Now I want to show you what happened right here, right at this end cap, and why I would 100% take the entry at the end cap, right? So price comes down on real flow and taps into it and goes, and it breaks the EMA right here, right at the right after the 30 minute candle is confirmed, or I'm not saying confirmed, sorry. Starting the new 30-minute candle is starting right there. And if you look at it, this one's tapping through and this one's tapping through right on that candle. So that is a really good indication that price is actually about to reject and push up. Now, how far it goes, we don't know, but we have our targets, right? We can target end cap to end cap, or we can use institutional ladder. That's what I use for targeting, is institutional ladder. And because price typically rejects or does things at those points. And there you go. So there's the institutional ladder right there. And price is doing things. And FLB was actually a little bit more accurate, gave you just a little bit more here. But looking at that, who knows what I would do? I don't know. I didn't take this trade. I actually got in earlier in the day. But yeah, so there's the explanation for all that. And yeah, you are using edge pulse, correct? And as far as retracements, surge is better for finding retracements than edge pulse. Edge pulse will, but edge pulse isn't really designed to do that. It's designed to show you where we're contracting, right? And where we're starting to expand. Now, surge right here will show you let me get rid of all these other ones real quick. We can just look at this. Now this is surge, and we also, again, we can put on pro, and it's going to show you the histogram and everything else. But when we're looking at it the way you're looking at it, you're not going to want to look at it like this way. For continuation pullbacks, it's really good for finding those. So say we're in this run up right here, you'll see that this line and this line is above 0. We're green here. you're looking for pullbacks into this right here into the 0.5 or the 1.0, right? And once it pulls back and comes back up and breaks the level that caused it to drop, look at what happens. You get continuation, right? This one down here comes down, 0, breaks up, we get continuation. Okay. And then red, this is just that pullback. But for end cap rejections and dynamic zone rejections, well, more end caps. You don't want to use all of those. You want to be looking at it like this, and you want to look at, is price coming down and tapping into the end cap while we're reaching a 0.5 and a 1.0, and is there a divergence, right? So let's check. So we had a divergence on surge, we know that, or on edge pulse, we know that. And then do we have a divergence here? Well, this is showing a higher low than this right here, slightly, but it is there. And so let's find that. And we definitely have a divergence. So this is the low area right here. And then this is the low area right here. And this is a lower low. And this is a higher high on the surge. And that's showing you, oops. There is a divergence coming into this end cap and prior to it leaving. So, and we had it on surge as well. So that's, and then we're rejecting the real flow at the same time, right? So just to put it all back together, we'll just go back to edge pulse and then real flow. And then, yeah, so we got a rejection of real flow. We have a divergence on surge, which is, this is generally for pullbacks. And then there's also a divergence on edge pulse here, showing this low and this being a higher high right here. So everything in this area is confluencing that this end cap is real. It is going to reject, and the risk should be put on at this point, right? If we're gonna do that, so you have price action in green. We're sweeping orders right here, and then we're rejecting the zone, and then our technicals are telling us to get in the trade. So honestly, this would be the better entry, and then we would be looking at this as add-ins, and then trying to pull to the next zone there. Hope this helps you. Let me make sure I've answered all your questions. But yeah, you're pretty much spot on. You're looking at it right. But yeah, the vertical line isn't for price breaking away. It's basically just a timer on that time frame. Hey, if the move hasn't happened, like the pullback rejection hasn't happened within 30% of the move, then it probably isn't. Like this one right here is a really good indication of that. So here's a 930 candle. So we're looking at like 30% around here somewhere. We haven't had a meaningful pullback prior to that, right? We didn't really have a rejection type candle, pushing up, down, up, crossover there. So now that one would be just invalid. Now, if you come to this 30 minute, we had the breakdown and break up before the 30%. So this would be kind of a valid setup for a newer trader to go, okay, it happened before that. I'll go ahead and try. So that's all that is. Anyways, I hope you have a good one. If you have any more questions, shoot them over to me.